Hey everybody, how is it going? Welcome back to the channel and to another stock market update. I haven't done a video in about 4 or 5 days, so I just wanted to give you my take on last week's price action and where the market could be going this next week. I'm recording this on the 7th, so Sunday night, so where I think the market could be going, at least the beginning part of this week that starts with August the 8th. But I'm going to start off with the QQQs, and of course after I get done with the indices, I have some other charts that I want to show you. I think that look pretty darn interesting, and I have a bunch of them, so I'm going to try to get through this rather quickly. But starting off with the QQQ, or the NASDAQ ETF, zooming in a little bit closer, you can see we've had a bunch of chop, and I'm starting to think that we're probably going to get some downward price action this week. It just looks like there's been some selling coming into the market. We had two topping tails a couple of days ago, and then that probably trapped some people thinking that we're probably going to get that rollover right then. I had a little move up, probably had some short covering, and then it started to roll over a little bit. But if we go to the hourly chart and take a look at it, we can definitely see that there's some weakness coming into the market. You know, it's starting to roll over just a little bit. Couldn't get very high above this breakout right here before it rolled over again, and it actually found some support right at that top. And I'll actually get into this price area in just a second, because I actually went kind of short the market. I bought some calls on the SQQQ, and I was thinking we were going to come down to this area and find some support, and it did. And unfortunately, I didn't take any of the profits, even though Studio from the Patreon group did. So probably should have been a little bit nimble and a little bit more nimble, and took some profits once it came down to this 318 price area. But I'm thinking we're probably going to get another rollover. But the SQQQ position that I'm in right now is just a hedge. In case the market does roll over. If the market continues to go higher, I'm going to make money on all my longs. So either way, no big deal. If the market does roll over, hopefully it's just a small rollover, and I can make some money on those call options, and then the market hopefully turns right back up. But this is the reason why I'm thinking we're probably going to get a rollover right here. We have this resistance all the way over here that is going to be, looks like it's probably going to be pretty tough to get through. And the QQQs look like they're having a hard time. And actually, this resistance goes all the way down to this price area. So we had a little bit of a breakthrough, but it looks like some more selling is starting to come into the market. And another reason that I think we're going to have some resistance right here is something I talked about on my previous video. Actually, I got to adjust my moving average. Got to bring her down a little bit here. Actually, I got to go up. Let's go to 30, because it was the 30-period simple moving average that I talked about in the previous video, where I was saying that the NASDAQ was finding some resistance at. Found it right there. Actually, that was support. Support there. Support here. Then it came up to the 30-period simple moving average, and once it hit that moving average, it rolled over again. I'm very disappointed in myself that I missed that trade, but I can't dwell on that. But it's right up to that moving average again. This is another reason why I'm thinking we're probably going to find some resistance in this area. I would expect it to come down and probably come down near this 8-period exponential moving average on the QQQ. But being that the MACD has finally turned positive, and has turned positive in a strong manner, I think this is just going to be a pullback in this counter trend. The market's been going down, so this is a counter trend up. But I think it's going to be a pullback, and then it's probably going to start moving higher. At least that's what I think is going to happen. That's actually what I hope is going to happen as well. So I hope I'm not blinded by my own hope. But let me get this crap out of here. Let's go back to the let's go back to the daily chart. Let me show you one more thing that I wanted to point out on the NASDAQ. We can see that the moving average convergence divergence indicator has been positive for a very long time. So this is another reason why I think we could be due for a pullback. And actually, let me see how long this thing has been positive for. We go all the way back to where the green line finally crossed the red line, the fast line finally crossed the slow line. If you look over here on the far left corner of that box, you can see it's been positive for about 30 bars, about 1.4 months. Let me see here, right about there. 30 bars, 1.4 months. And you have to go back quite a ways to find, a move like that in the moving average convergence divergence indicator. You have to go all the way back to 21. I don't even think it went up that long back then. actually 1.6 months. So you have to go all the way back to the middle of 2021 before we had moving average convergence divergence indicator go up for that, or at least stay positive for at least that amount of time. Then you have to go all the way back to the bottom of the COVID crash before it did that again to get a reading where you had the moving average convergence divergence indicator positive for that long. And then you can see we kind of had a buy sell reading on that indicator. And if you ever see something like that on any indicator, that just means the cycles are too tight. You need to go a little bit further intraday to try to get decent buy and sell signals on that indicator. But anyway, it looks like that the last two times it did that was right before either a rollover or at least a pause in the market, like it did off of that COVID bottom. Now, I didn't realize we were going to have such a sharp bounce off of the COVID lows, but I don't think a lot of people saw that coming. But let's take a look at the spider, or the S&P 500. You can see the S&P 500 also looking like it's running out of gas up here. So if we go to the 15-minute chart, we can definitely see we got a little bit of a rounded top formation started to happen in the S&P 500. Now, of course, if we get a strong rally and it breaks above this area right here, right around call it 416, that negates the rounded bottom formation if it continues to go up. So there's no guarantee that we're going to get a rollover in the market, but I do see plenty of reasons why I think there could be some resistance in this area. You can see this big strong area of resistance on the S&P 500. Now let's take a look at the Dow Jones Industrial Average, or the diamonds, the DIA. You can see same thing, we're getting some chop in here. If we go to the 15-minute chart, you can see it's having a hard time, and if this thing does end up breaking this 200 period simple moving average on the 15-minute chart, I think there's going to be some more downside for the Dow. But there is definitely some resistance up in this area on the Dow as well. So another reason why I think the market could be getting a little bit tired. Let's take a look at the IWM. You can see the IWM is coming right into that resistance right now. Nice strong move on Friday though, but there was a lot of reasons to like the price action on Friday, and a lot of those stocks are in the IWM, and I'll get to that in a minute. But you can see the IWM, or the Russell 2000, coming into some resistance. And if we take a look at oil, in my last video, I believe oil was right up here. And I talked about how I was thinking oil was probably going to come down and at least tag that 200 period simple moving average, possibly break a little bit below it. It's come down, but it's just having a hard time making it all the way down to that 200 period simple moving average. So I don't know if it's going to end up hitting it or not. I would expect it to not only touch it, but probably break down through it by a little bit before oil turns back up again. And who knows? I mean, oil could could be in for a multi-month pullback, and that would be good news for not only the economy, but I think it'd also be good news for the stock market as well. But let's get into some individual charts here. Let's take a look at Carvana. Carvana had an absolute explosion last Friday. You can see this thing was carving out a very nice bottom. In fact, let's get some volume on here. You can see in this rounded bottom how much volume to the upside really started to pour in. This is smart money, usually building a position near the bottom. This is usually not retail traders coming in with this type of volume. You can see there was several days where volume was way above average, and they were all green bars. So Carvana is looking like it is making a rounded bottom. One stock that I own that is related to it, I have some call options in Vroom, and Vroom is Carvana's competitor. You can see the same exact thing. This is one of the reasons why I wanted to buy some call options in Vroom, but I talked about this one in my Patreon group. I actually started buying call options a couple weeks ago, but I was talking about Vroom coming down to this channel right here, and just had a huge explosion. This thing exploded all the way through the top of the channel, so Vroom is looking very good at the moment. This thing looks like it's going to start getting into that trend acceleration part of the chart right here. So hopefully that does happen, because I am a little biased. I do own some call options on that one. But there's just a bunch of stocks out there that were, growthy names that weren't profitable yet, the ones that have been getting killed. And those were the ones that I wanted to see turn around and start heading up to make me believe that the the market rally, the potential summer rally, actually had some legs. Let's get into some of those stocks. One of the high flyers from a couple years ago was AI, C3AI. You can see this one was all the way up around $150 a share. This thing came crashing all the way down to around $13.50 a share just a couple of months ago. You can see it's been grinding out a nice little bottom so far, and this thing looks like it is ready to blast through this resistance area right around 21. I don't know, call it 2175 just to be safe. And I think if that does happen, we're probably going to have a move up to this 200 period simple moving average. So this is one that I am watching on the breakout, just a nice rounded bottom forming in that one. Another one that I like is actually Uber. I own some stock in Uber, and I was actually trying to buy some more shares when it was down around $20 a couple of days. I had some orders in, and it never came down and hit my order, and it would have been nice if I could have doubled down in those low 20s. This thing, it just exploded higher, but it's probably going to find some resistance up here right around the 200 period simple moving average, because we also have that resistance from back in April and in May. So I think Uber is looking super good, but it's probably going to hit a wall here for the short term. And of course, their competitor is Lyft here. Let me see if I can remember the ticker. There it is. You can see Lyft looking dynamite as well. Nice little rounded bottom, big volume coming in. This isn't retail traders typically. This is big institutions looking to get in on the start of another trend reversal, I should say. So I think Lyft looks pretty good. Another one I think is looking pretty good for a trade is iHeart. This one is iHeart Media. You can see this one a nice move above all of those moving averages. And I think if we get a break above 950, this one could be heading, but this one certainly could be heading higher. So this one is on my watch list for a potential breakout. Another stock that was a high flyer that is starting to turn around is Fubo. You can see Fubo making a nice rounded bottom. Big volume coming in here at the other side of this rounded bottom. So I don't know, man. It just looks like institutions are finally starting to get on board of some of these growthy names. And make no mistake about it, value does outperform growth from time to time, but people get into the stock market for growthy stocks. People want to buy Google in the early stages. People want to buy, Apple in the early stages. They want thousands of percent gains, and you're only going to find those in the growth names. You're not going to find very many value stocks that go up, 1,000% or more, in a relatively short period of time. But with these growthy names, I mean, if Fubo ends up, jumping back up to around $25 a share or so, that is a massive gain. I'm not saying it's going to do that, because that is way up here. That's way above where my chart is. You got to go all the way up here, but eventually it could make it up there in the next 5 or 6 years, depending on market conditions. But that's where you get the real outperformance in the market, if you can kind of get lucky on some of these growth names. But another one I want to talk about is DK. Haven't talked about this one in a long time. Haven't liked looking at this chart in a very long time. I don't own any of this one, but you can see that we're starting to get a nice rounded bottom in DraftKings, and big volume coming in lately. So if this thing does pull back and make a low right down here around 15 or so, I think because we've already had that break above this resistance area, if it come down, touch it, and then start to move back up, I think that's going to be a nice trade for that one. Another stock I really like that I don't own is Opendoor. And I just think Opendoor's business model is rather fascinating. Their value proposition is they can come in and give you cash in as little as 3 days. And, buying a home, the whole process of that, buying and selling a home really sucks. And if you can, streamline the process down to about 3 days, now I can imagine they're not going to give you probably full market value, but if you want to get out of a house quick and you don't mind taking a little bit less than what you were thinking, it's probably not a bad idea, especially if we're in one of these housing markets where it takes a little bit longer for houses to sell. You're in one of those situations where you've already bought another house, so you might have like 2 mortgage payments going on at the same time. A company that can get you out of one of those mortgages in as little as 3 days might seem very appealing. But Opendoor, I think, is very interesting. I almost bought some when it was in the low 4s, or the mid 4s, I should say, and I probably should have started a position in them, because if The housing market remains undersupplied for the rest of the decade, which it looks like it's probably going to be. That could be a pretty, nice business for Open Door. And now that Zillow has gotten out of that business, there really isn't a whole lot of competition. So I just think Open Door is pretty interesting down at these levels. Another one was Beyond Meat. This one has been getting decimated for a long time, but you can see finally starting to make a little bit of a rounded bottom in Beyond Meat, and a lot of volume coming in, so that one is interesting. And then before I end the video, I want to talk about some of the Bitcoin names. Let's take a look at the one I own first, which is CleanSpark. This one is actually weaker than most of the other Bitcoin miners out there, but nonetheless, CleanSpark starting to make a nice rounded bottom. You got some nice volume coming in these last couple of weeks. And if we can get a break above call it $5.15, excuse me, I think CleanSpark could finally start to move a little bit higher and get going, especially if Bitcoin has made a bottom. Bitcoin is just kind of drifting up. I'm not really having a lot of confidence that Bitcoin is making a bottom at this point, but you never know. I mean, something can happen where Bitcoin can break out of that little training range that it's in right now and, break above 25,000 and start really moving to the upside. If that happens, the Bitcoin miners are probably going to have some nice moves. Another one that I'm looking at right now, I don't own this one, is Marathon Digital Holdings. You can definitely see that this one is making a very nice formation at the moment, and if it can break this little resistance line right here, I think Mara could end up really exploding, especially look at all the great volume that's been coming in on Marathon Digital. So, I mean, these things look like, when you look at the pattern and also the volume coming in, these things are really looking like they could be bottoming. Last one I want to show you is Bitfarms. This one is also looking good as well. I think if Bitfarms can break above about $1.70, I'm probably going to take a position in a Bitfarms. Pattern just looks beautiful, nice creeping uptrend. If we get a nice breakout, I think this thing could really start moving to the upside. So Bitfarms is actually really high on my list for a potential trade. But you know what? I have a bunch of them on my list, but I'm going to cut it off right there. This video has gone on almost 20 minutes already, but I think you guys get the point. There are a lot of growth names out there that are making very nice bottoming formations with good volume coming in, and this is what you want to see at a market bottom. So I just wanted to make that point in this video. I'm going to end it right here. If you guys have any questions or if you see any other nice looking stocks out there, especially growth names that are making a pretty nice pattern, make sure you leave them for me down there in the comment section. I'd really appreciate that. But I'm going to end it right here. Thank you so much for watching this video all the way to the end. And until next time, take care, everybody.